What's up, options traders? This is Sean with optionsprotrading.com. This morning, I posted a video about the Intel play. They had a bad post earnings, and we were going to go in. If you're a member of our premium Discord, you already got the trade setups. And today, it's end of day. It's already about 4:28. Market's already closed, and I wanted to deep dive a little bit more by request on the strategy that we're employing. This is an advanced strategy that we teach. We like to call it the Iron Eagle. It is a combination of two different spreads, a debit spread and a credit spread, all of which individually are taught in our classes and on our Discord servers and in our one-on-one coaching. So without further ado, let's get into it. So as we know, as of this morning, Intel, they had a bad post earnings call. They went ahead and kind of missed expectations. We are taking advantage of the sell-off fear as we are still bullish overall, and I'm confident that it will fill this gap down that it did pre-market this morning, which is about $7 to $10 drop. So the Iron Eagle starts off with the bear put spread. It is a debit-based spread. And so if I can show you at market open, we went ahead and we did slightly in the money. We went slightly in the money to give ourselves an extra bit of, safety, and a little bit of an extra edge in case things go wrong. As we both know, trading involves a lot of risk. Sometimes we can be wrong and sometimes we are. Part of the things that we also teach at Options Pro Trading is how to mitigate that risk, how to adjust losing trades into winning trades, and if all else fails, minimize that loss so we can continue winning. And we pretty much know that over time, our wins will way outshine the minimized losses that we're taking. But that didn't occur. We had a great day, and I'm going to show you how. So the bear put spread went in this morning. We popped in a strike of about 47. Our break even was at about $47.83 to the downside, as you can see. Just like we called it, the fear sell-off kept happening hour by hour. The price of, of Intel kept going down. Ended the day at about $45. We closed that trade right before the end of the day, and we pulled in a quick $60 to $70 of profit. That's a great win for a same-day trade. If you notice on the right, our expirations are way far out. A lot of people love doing these naked long puts and to try to minimize, maximize the profit, not really minimize the risk at all, because theta is a horrible enemy on a same day. We do not teach that kind of reckless gambling. We teach the conservative way. Even though in a debit spread, we know that time decay is our enemy, but we have methods of minimizing the enemy to almost inconsequential numbers, and that's what we did here. So we leapt out, as I like to call it, out to about March, and that kept theta at bay in case we needed to hold on to the bear put debit spread for an extra day, 2 or 3, and we could have still really held it, to be honest with you, but I was targeting a nice quick little hit, and we hit it. So I decided we pulled out at about $60. That's part 1 of the Iron Eagle strategy. Now part 2, now that that's gone, I'm going to go ahead and get rid of it. So we're out, we're clean. However, part 2 of our Iron Eagle strategy, shortly after we put in this bear put and we saw the downward movement, we saw the verified unusually high sell-off volume down here, we went ahead and we executed phase 2 ahead of time of the bull put spread. The bull put spread went in right here at about 45 even, keeping the same expiration. Bull put spread, we teach you guys, are theta positive. Time decay is our ally here, so we outweigh our theta decay on top of the bear put spread. So now we are stuck with a bull put spread to the upside. But now what happens if we keep going down, like we very may will? Because as you see, it can keep dropping theoretically to fight support at about $36 while it's only at 45, but that's okay. The Iron Eagle strategy is that we are secretly okay, or we're targeting share assignment. So by doing that bull put spread, we already won profit on the debit. Now we have a credit spread, which we did pretty good. We're getting about $213 of credit if we don't have to end up owning the stock. We're going to make another extra $213 by the end of March, or possibly before, depending on movement. But if it keeps crashing, we are prepared. That's fine. We want to own the stock anyway, because our mid to long term on Intel is still bullish. Government bailouts, we still had a mixture of pretty good call volume even during the sell-off and options flow activity. So as this thing keeps crashing, if we expect it to do, which we do for a few more days, we will close one of the legs of the bull put spread. That will be the long put for you guys that happen to understand a little bit more of what I'm talking about. And that will gain us a second hit on our profit, which would lead to our eventual assignment at a fantastic base cost, which enters us into our phase 3 of our Iron Eagle, where we will be so-called called away or employ some other strategies that we also teach for consistent weekly and monthly passive income. All of this is yours to learn, master, keep printing that money. Visit optionsprotrading.com. Join our Discord server where we have live trainings like this that go way beyond the scope of this very short video. This is just a piece of the puzzle. Guys, come and get it.